Hi everybody, it's Linda. Welcome back to Tips for You. Well, today's video is going to be about stock investing. A few months ago, I did a video called Learn More About Me. And in that video, I shared with you that I do stock trading. And I have for the past decade, self-taught. It's a big passion of mine and a great hobby. And so many of you wrote to me and said that you're really interested in stock investing and trading, but you just didn't even know where to begin, and you'd like me to help you by sharing some of my knowledge in videos. And I'm really happy to do that. So if you would just let me know below if this is something that you want me to do more of, because I'm interested in doing a series on this where I give you, educational tips in videos going forward on how to help you learn about stock trading, because there is so much to learn. Now, I do have a financial background. I am a certified public accountant, which is a CPA, and I went to school for accounting. Now, I don't practice publicly anymore. I do accounting now and tax work for friends and family, my husband's business. So I do other endeavors now. I spend most of my time, besides obviously maintaining my YouTube channel, doing my portfolio management with my stocks that I invest and trade in to make supplemental income. And you know what? I do really well in it. I love it. It's a very dynamic field. There's an endless amount of information that keeps my interest. You have to stay current. You have to know what's going on in the world. You have to know what's going on in the economy, with the political spectrum, with the Fed, with inflation, what bonds are doing. All of these help you make a financial decision on where to put your money. Now, although having a financial background can be very helpful, it is not a requirement, so don't let that hold you back from wanting to learn to invest or trade stocks. I always believe that you can learn anything you put your mind to if you put in the time and effort, and you can be not just good at it, but great at it. One of the best ways to start is, like I said, to pay attention to what's going on in the world and the economy. So start watching the news and reading the news. Now, there are a couple of things before you get started and decide whether this is something for you, whether you should put money into the stock market, that you should know, because you shouldn't just take your money and put it in stocks. So let's go over some things you should know before you invest in stocks. So first of all, what is a stock? A stock is defined as a share of ownership of a company. So if you own a company's stock, you actually own a percentage of the company itself and a percentage of its profits. Since you own part of the company, you are entitled to vote on any changes that occur in the company. Things like choosing the board of directors, picking independent accountants, and approving any major changes in the company. And you will actually receive a proxy statement asking you to vote either by mail or online from the company. So let me tell you how stocks evolve and where they come from. So let's just use Facebook as an example, because we all are on Facebook and we know Facebook. Mark Zuckerberg is the CEO and creator and founder of Facebook. He started this company in college at Harvard, and he built it up. He started it just himself, so he was the only shareholder of the company, and the company was private. Now, as he needed maybe money to grow Facebook, perhaps he let other people come in. So let's just say he let his buddy come in and said, okay, listen, I need $50,000. I'll take you in as a partner if you give me $50,000, and in exchange, I'll give you half of the equity that's in my company. I'm going to give you half of the stock. So let's say he had issued 100 shares of stock to himself. He gave this guy 50. So now they have 50 shares each. They're a private company. They can decide whatever shares they want. So they grow the company over time. And maybe then he gets big enough and he meets certain standards that he wants to go out into the public, which is what he did. And he wants to sell shares on the New York Stock Exchange to the public. And those shares are going to trade on an exchange, on the New York Stock Exchange. So he goes and he does what's called an initial public offering, or an IPO. and he goes to the market, and he has all of his investment bankers with him, the Goldman Sachs's and the Morgan Stanleys. They help him generate interest in the stock, and they go over the country and talk about the company and how it's going to grow its revenue, because no one's going to want to invest in Facebook unless Mark Zuckerberg is going to tell people, look, this is what I plan to do to grow this company. Invest with me. Give me your money because I'm going to grow this company. I want to grow this company so much that I can't do it with the money I currently have. I need bigger money. Okay, so he does an initial public offering. He comes to the market. So an IPO, or initial public offering, is when a privately held company like Facebook was is transformed into a public company. And an IPO is used to raise money for the company. And you and me and other people, we buy shares in that money. Now, when he goes and initially sells those shares, he gets a bunch of money in return, and he walks away. That's his money. He's not going to get money after that from you and me trading shares of Facebook. That's going on an exchange. A stock exchange is a regulated financial market where securities, or stocks, are bought and sold at prices governed by supply and demand for those stocks. And here in the United States, stocks trade on two exchanges, the New York Stock Exchange and the NASDAQ Stock Exchange. So you own a little piece of Facebook. When you own Facebook stock, you own a piece of his company. He's got the money from the IPO now, from going public, and then you and I are just going to try to create wealth by trading those stocks back and forth, and that's done through a brokerage account. So when you open up your account, you're going to have no stocks in it. You have your $500 or $1,000 sitting there, and you say, okay, I want to buy some shares of Facebook, and I have $1,000, and Facebook is trading currently around $190. So what does that mean? How many shares can I buy? So let's figure it out. If we have $1,000 and we divide it by $190 per share for Facebook, we can buy 5.26 shares. However, you cannot buy fractional shares. So with our $1,000 example, we can buy 5 shares of Facebook stock for a total of $950. But we also have to pay for the commission fee to do the trade. And in my case, it's $6.95, so we have to add that to the cost of buying the shares. So our total purchase cost for Facebook shares, 5 shares, is $956.95. So that goes into our portfolio. And when Facebook stock goes to $195, then you have made $5 a share on your investment. Okay, $5 increase times the 5 shares that you have, and you've just made $25. And that's how it works. And then one day, if you decide, you know what, I don't want to own Facebook anymore, I don't like the direction it's going in, I don't like this, I don't like that, you're going to stay on top of the company, you're going to see what Facebook is doing, they're putting out new video, new platforms, they're going into this, how are they generating revenue, how are they growing the company? And if you think that they're continuing to execute on all metrics and you're happy with it, then you'll hold your stock or you'll buy more. Or you may say, you know, I don't want to buy that much Facebook. Let me diversify and buy something else. Now, if you say, okay, I'm going to go and buy Google or Alphabet, well, you know what? You're buying a stock in a very similar sector. You're buying Facebook and you're buying Google, and those are both advertising companies. Generally, they're also tech companies. So when the stock market is unfavorable towards those tech companies, both of your stocks are going down. So it might be a better idea for you to look into a different industry. Maybe look at a Macy's or something. Say, oh, I'm going to diversify and I'm going to put some money in Macy's now. And then you can maybe, after you've got 5 different stocks across different sectors, maybe you want to go back and add to each of them. Don't buy too many. You know, you want to diversify and have some, but if you buy too many stocks, then you've kind of spread yourself too thin. It's hard to follow all those companies. It's hard to keep abreast of what they're doing, and it might be too overwhelming for you. So start small, you know, maybe 5 stocks. That's it, and see how you do. Diversification is one of the most important things in stock investing. It's a risk management technique of allocating your stock investments across different companies that are not correlated to each other. And I'm going to talk more about it in the second part of this video when I discuss investing. Another question that beginners often ask is, do you get an actual physical share of stock when you buy stock? Years ago, maybe you did. You were sent a stock certificate. You probably see like great grandma has a stock certificate in something or whatever in her safe deposit box, but they don't do it that way anymore. You look at your account, it'll say you hold how many shares, and it's all done through the brokerage account. The broker is in charge of your account. Just like when you deposit money to a bank and you go with your paycheck, right, or your cash, and you put it at Wells Fargo and they take it, well, you know, they have your money and you just get a piece of paper that says you just deposited, you know, $2,000 into the bank. You're not going to get anything else. Like, you're not going to see the cash sitting there in the dollars. You're just going to see a number. It says, I have this much in the account, and that's what you'll know. And then when you go to sell it, they take it out of your account and they charge you a commission. Another question beginners have is, how do I actually make money in the stock market? How do I get that money? Well, you don't lose money or make money until the day you sell it. So while you're owning that stock, you basically have what's called in the industry as a paper gain or loss. It's called an unrealized gain or loss in accounting. That means that you haven't physically taken it yet. Okay, you have it on paper. So let's just say, using our Facebook example, you buy 5 shares of Facebook and it's in your account. And today your investment is worth $1,000 and tomorrow it's worth $800 because the stock went down. Now, you don't necessarily have a loss of money unless you sell that stock that day and get $800 back in your hand. You lost $200. The same is true if the stock goes up. And it was $1,000 when you bought it, and you had $1,000 worth of Facebook stock, and today you open up your account and you look at it and you have $1,500 worth of Facebook stock. You just made $500, right? If you sell that stock today, you get back $1,500. That's your original $1,000 plus an extra $500, which is your gain. It's called a realized gain. So you'll have a realized gain or a realized loss, and that only occurs when you sell something. And all the other times while it's sitting in your account and going up and down and up and down, you have not gotten a gain or a loss. So on paper, you have the gain. In your account, you're looking at it, oh, you're a rich person, it's $1,500. Look at that, and my stock is making money, it's making money, my portfolio is growing. That's great. You don't actually have that money to go and spend somewhere. It's in an account until you go to sell it. So if the stock is down for a day and it's below where you bought it and you say, oh gosh, look at that, I just lost $100. Well, on paper you did, but tomorrow the stock could be up more and you could be, $100 higher. So like I said, it goes up and down and you have to be prepared for that. You have to have the temperament for that. Okay, you can't panic every time you see it go down. Stocks are one of the riskiest investments that there are out there. They're also one of the absolute best wealth creators. Fortunes are made every day with stocks. Fortunes are also lost with stocks. But for some people, that's what gets them in the game. They love the fact that if they pick right and do things right, they can make a lot of money. But you have to be careful, and you will make mistakes along the way. And maybe I can help you avoid some of those mistakes, because there is the attraction to cheaper stocks and things like that, and I'll get into that. But really, things are cheap for a reason. You have to remember that. So before we get into anything about the stocks, let me just tell you first what you need to do and how your life needs to be organized, because I really want you to succeed, and I don't want you to lose money, and I don't want you to make a decision that's not right for you. Do I think everybody should have stocks and a portfolio? Yes. Does everybody have to do stock trading and day trading? No, that's not for everyone. That takes a lot of work. That's almost like a job, okay? But you never know. It might be something that you want to do as a job. In addition to the creation of more wealth for you, there are other advantages of stock trading. You can do it from anywhere, from home, from your office, when you're on the go. All you need is an app where you do your trading from. And anyone can do it. Any age person can do it. Even people under 18, if you have a guardian who will open the account for you, you can begin stock trading. First, we're going to check your financial health to make sure that you're healthy enough financially to invest in the stock market. If you're interested in stocks, the first thing I want to say to you is that you have to make sure you can afford to put the money into stocks, because stocks, being a very volatile place to put your money, goes up and down. And if you need that money for car repairs or rent or school tuition or anything else that might come along in the next year or two, don't put it in the stock market, because the stock market fluctuates. It's very moody. Okay, the littlest bit of information that comes out that the stock market doesn't like, it reacts by selling off stocks. And now there's a whole new mechanism in the stock market, and that is electronic trading. Computers are doing trading. They are programmed to sell when certain events happen or certain news comes out. And you could watch your stock go bang right down in one day, and it can be a real shock and a very difficult thing. And if you have the patience to wait and you have the longevity with your investment, then this will be something good for you. But if you are going to panic, and panic is very often caused by putting too much money in, then this may not be for you. So let's explore that. You have to make sure you pay off whatever debt you have. So if you have credit card debts or you have other areas that your money needs to go, then I would suggest you do that, because you're costing yourself interest every month, and you don't want to do that, because whatever you're making in the stock market is going to be canceled out by all that interest that you owe on your credit card. So take care of your financial health first, okay? Get rid of your debt. Put some money aside for 6 months or so of income for yourself in case you lose your job or something comes along, an expense that you don't foresee, or someone gets ill or whatever. You need to have a savings account. So put at least 6 months of money that you need to live aside. That's a requirement. Your first objective should always be to save money. Okay, cash is king. Building a savings account is your number one priority, and you want to be liquid. Liquidity is the key in life. You want to have cash. Cash is king. Cash will buy you freedom. Cash will make you independent. You want to build up your savings accounts. You want to have that cash free and liquid so you can buy whatever you want, and you don't have to answer to anyone. You are an independent, self-sufficient person. Your own savings, your own cash, right? Okay, so you don't want to tie it up. This is just something that you're going to do to generate some extra income in addition to your cash nest egg. Okay? Now, there are things you can do to make some money on that money. You don't just have to put it in a checking account. What I suggest is you put it in a money market mutual fund. That is the best place to put your money. There are so many, and online money market funds pay the best interest rate. So there are money market mutual funds, there are money market savings accounts, and if I know I need the money to pay quarterly taxes or whatever, I'll put my money in a money market savings account, because I'm able to write checks off of that money, and it's very easy to do that. Money market mutual funds will let you do that as well, and you'll get the best interest that's out there, and it's liquid. You can get at your money. Very often they have a minimum, those accounts, where you can't write a check for below $250, so you will still need to have a little checking account. You keep some money in there, but then you transfer primarily most of your money to a money market account, and that's where you keep it. So you can earn like 1.8% now. Some pay a little bit less. Look around. Allied Bank is a good one. CIT Bank. All you do is you write a check, you send it in the mail to them, and they will open, and you fill out the online account right there on your computer, send them a check, and you've opened an account. You can also wire transfer money in, called ACH transfer. And you just open the account online, or you could do it over the phone, and then you wire the money from your bank account or checking account at your bank, like a Wells Fargo or whatever, and you wire it to your money market account. And that's what I do because it's the easiest thing. I will wire, and it doesn't cost anything to do that, to move money back and forth between your money market account and your savings account. Okay, that's called an ACH transfer, and those do not cost anything. Eventually, if you have your brokerage account where you can do your stock trading, then you can transfer your money from your checking account. If that's where you deposit your paychecks and things, you transfer that money by ACH directly into your brokerage account. Okay, so if you've got all those things in order, you've got a savings account with at least 6 months of money put aside for a rainy day or any problems that arise, you've paid off your credit card debt, and you can afford to take more risk with your money, then you're ready to invest in the stock market. Please click here to go to part 2 of this video, which will tell you the best ways to invest in the stock market.